All right, so GBPUSD, look at that bad boy pulling back. I love to see that. That is our weekly chart. We made slightly lower lows. So let's go back in. Let's go look at a daily. Now, again, gang, on this, it's about perspective. So when we go through our pre-market analysis here, what we're doing is the context is such that we pull in a market analysis chart template, okay? So this particular template has our basic setup and signals on it. We're looking for turning point, black tip. Number 2, I want to come in and identify key price points where we might have an interest in A, getting long, B, getting short, and then C, taking profits if we're in a position, okay? So contextually, we set this up, and all I have to do literally is just start walking through the markets that I might have an interest in trading. So we talked about this yesterday. We said with the trade below, close below, the 167.27, then we'd look for a continuation move. So how do I arrive at my projections based on current price action? You've all probably heard trade the hard right edge. So this is a beautiful example right here of some Fibonacci analysis. There's my impulse wave right here that made a new structure high. All right. Now on the right side of this, we're high probability going to see an AB, B to C. If AB were to equal CD, then where would that terminate? So my ABCD projection comes in basically 66.5. All right, now the next level, I want to go in and look at my fib extensions. Now I typically go left click at the high of A, left click low of B, and then drag it back up to the high. This is a static swing in the market right there. Now I'm projecting the 127 extension comes into play at the 618 Fibonacci retracement. That's also where my ABCD terminates. So I've got confluence. So when I talk about confluence over and over and over, we see it not only in the market, we see it with technical indicators, Fibonacci analysis, which again is a little bit more discretionary because I'm the one that determines the swing highs and swing lows that I use for my analysis. Okay, technical indicators, obviously everybody can see that candle is black, period, over and out. We know that that was produced based on a close below this fib dot or this volatility. Okay, now let's take a look at another static swing in the market. I'm going to left click at the highs of the BC leg. I'm going to go left to that swing low, pull it back up. The 1414 of that leg meets the 127, meets the 618. So additional strength of signal. Okay. All right, so we've got an ABCD termination point down there. Again, we looked at this just as a massive sell signal based on the fact that we'd hit 7-year highs. So black bars right here, this is counter trend. As you can see, the market's been in a bull continuation pattern. I also talk about tendencies. So with this basic template, we could say, what if? Again, what tends to happen? What if? So what if I waited for back-to-back white bars and then bought the next bar at market? I'm going to pull this down. You see the market moved against me 141 pips before it moved in my favor 207 pips. Absolutely. All right, so let's just take a look now at a couple of things. So there's GBP, EURUSD. We looked at a key price point. You see that the 136.50 gave way. This is the daily. And now we have 3 lower lows with lower closes. Yesterday's new structure low took out that 136 handle. We did get a close below it. So a rally back to the 618 Fibonacci retracement of the last leg down could produce low-risk short entries right here. There's the swing high that preceded the decline to that new structure low. So 136.36 short entries there in the euro. Again, how did this market turn? It was an extended double top right here. Look at the double top here. Come in, left click on your drawing tool, grab a rectangle, an ellipse, whatever it might be, and identify your cluster 2 cells, your cluster 3 cells, add a simple RSI indicator, one of my favorites. Timothy, if you're in here, the RSI is set to 5. So let's take a look at this real quickly. RSI is a 5 by 1. My overboughts are at 79.580. My oversold, bada bing, bada beautiful. Now again, I'm going to double left click here. I throw average true range on that chart. We'll put this down in 3. This just helps me gain some perspective on volatility and an expectation. So again, everybody knows we've seen declining volatility. With declining volatility, there's less follow-through typically, less directional movement. Directional movement for us, or ATR, equals opportunity. Volatility over here, we're at 131 pips a day, July of 2013. And you can see the ATR right here, we literally had support for the swing lows in volatility. We'd come down and test 95 pips a day, pop back up. Come back down, test 95 pips a day, pop back up. And just like we watch in the markets, obviously this is a derivative of the markets, we can see previous support in volatility, once broken, becomes resistance. Now we drop down and we go to 75 pips a day, back up, 95 pips a day becomes resistance. Volatility has continued to decline. So recent lows in volatility, 50 pips, EURUSD daily, and we're down to 54 pips a day. So if I say every time we see an SOS3 or cluster 3 buy or sell, risk 2 ATR to make 2 ATR, right now we'd risk approximately 110 pips to make 110 from these massive signals. Here's a great example. RSI overbought. There's the black tip sell. The best we could have done is to sell the next bar market. Grab the ruler. Okay, so we did not get this signal until the close of that candle. The same thing happens for us intraday. So if I sell next bar market, I'm short from 38.38 on the daily. The ATR at that time was 70 pips a day. Okay, so I'd risk 140 to make 140. So I'm going to just pull it down right there. You see there was a 160 pip move. By the time the market tested 195, here's the day of entry, day 2, 3, 4, 5 days later. Target 1, 2 ATR has been attained, and now again you can trail stops behind the fib dots. So you can go back in and take a look at tendencies. Now we can do the same thing obviously with the SPY. SPY took out structure resistance off to new structure highs. So there's a chart with data, with information. Where's this market headed? I'm going to grab my extensions. Okay, from this swing low, this high right here was a new structure high. So I go from left click here, left click at the new structure high, pull it back down. There are my fib projections based on that impulse leg that produced the new structure high. Now, this is not real convincing because you see it barely took out the previous highs. It did have a higher high and it gave us a higher close. So where's the market headed? 92.90s would be probable minimums, 196. Number 2, take a look left. Grab your horizontal line, drop it in right here. This is where the market found resistance, right around the 189 handle. Now let's look at the right side of the current trade. Is there a point of confluence? Here's the swing low that preceded the drive to that new structure high. And you can see that if we pull back down to here, then 189, previous resistance, once broken, anticipated support. We're going to have a point of confluence right here with the 50% Fibonacci retracement. So we've got two different technical indicators as we build a case for a potential entry. So right now I can predetermine what my risk-reward ratio would be. Number 1, if we pull back down to the 189 here, then let's say I buy 189. For me, I will not risk less than the swing low right here. That's a market structure stop. So my stop would come in. I would go 85.90s. So my risk basically is $3.10. My reward would be a retest of the current highs from 189 to 192. So basically $3. So that's about a 1-to-1 risk-reward ratio. My next expectation would be a move to the 193 handle, $4, and that typically is going to be approximately the value of the impulse leg squared. This projects to 194. So if we go to 194, the second target is at about 2 times our risk, just under. We're risking 3 to make 5. So if I put on 200 shares, I'm going to risk $3.10 per share to make $2.90 and then 5 to 5.5. Okay, so if I break those down, 100 shares of the Spider stock, $3 risk, another 100 at 3, so let's call it $6.30 total. But on the second half, if target 1 is hit on a retest, then my risk is reduced because now the protective stop here comes up to at or near my entry point. So if target 1 is hit, and I can get that with a high degree of accuracy, 65, 75, 80%, then I'm able to participate in the balance of the position free of charge. Okay, so in our level 2 automation, that's the primary function. A, identify the point of entry when all criteria are met. B, get to that target 1 with as high a degree of accuracy as possible, although we can be wildly successful on that contract 1 target, 70% accuracy. But if I risk 2 points to make 1 point, I can still wind up with a losing system. The key is I want to see that 40% of the time, as an example, I make this high, I go to a new structure high, and then I've got zero cost opportunity to look for that extended move. Again, it's not if it occurs, it's when it occurs, I get the chance to participate. Okay? Critical thought process there. All right, so that's the SPY. Let's go take a look. Spider's gapping today, so we'll look for a potential short entry, buy some puts for a potential fill of the gap right here that you see around the 190. Again, we'll watch S&P 500 futures contracts. If we get a qualified signal there, then we'll look to buy some puts. QQQs. Okay, there's the Nasdaq. Nasy's open. Let me reload historical real quickly. Weaker than the diamonds, than the spiders. Right back into this structure resistance. As we're rallying, note, RSI extreme overbought. Okay, so we'll look for this to pull back as well. So again, intraday, love this setup for a potential signal on the QQQs. Taking profits here, gang, real quickly. Mini Russell, we had a qualified sell signal right here. Okay, so those of you short the Russell, opportunity to take partial as we pull back down to our fib dots. Not only that, but I'll train you a little bit on how to use the fib dots. Okay, so Diamond, obviously, same basic thought process. Let's go look at IWM. Look at the relevance of structure. Again, don't clutter your mind with questions like, why did that occur? I wonder what's going on there. Forget about it. Just trade what you see, not what you think. Okay, so again, look left, write it down. Number 2, structure leaves clues. This is truth. You can go back in and back test this. This RSI extremely oversold right here on May 8th of 2014 as the market pulls back down to previous levels of structure support is going to be there 10 days, 10 weeks, 10 months, 10 years from today. Okay? Price is truth. Critical stuff. But again, those of you that try to incorporate fundamental data and so on, we may not remember how we felt that day, what the data was that day, what the reaction to the data was. So really focus on things that you can quantify. All right, there's that. Let's take a look at U.S. Canada real quickly had a buy signal the other day. We got a little pop off of that 0850 handle. And again, even a retest of this right here to pay 100 pips. Let's go take a look at EEM. Okay, so again, look, gang, just quick perspective. Where's the market relative to? Look at this massive resistance area. Could it trade higher? Absolutely, yes. Here we put in an island gap. We pulled right back down to below where it was comfortable. So right here, we've got alerts set up for 43.20s to 43.40s. And again, we will buy puts here. We'll look for short entries. Why? Markets always look the most bullish at the highs, the most bearish at the lows. Do you think structure has any clue or any relevance in this particular instrument? Not only that, but let's build a further case. I can already see it, but I'm going to show it to you here. Here's the swing low that preceded the drive to that new structure high. Bada bing, bada beautiful. 127 Fibonacci extension happens to be correlated with the absolute spike high before the market rolled back over and went straight south, $6. 15% of the value of the instrument. Number two, here's another static swing low to this swing high. This is an inverted fib extension. And you can see the 1414 is where we've stopped currently. The 1618 is showing confluence. So now I've got two different technical projections that come off two different swings in the market, both identifying the same area of probable resistance. Could the market go through there? Absolutely yes. So again, for me, a key price point 43.32. A, buy the puts if it tests. B, identify that key price point, then pull it down to a 60-minute time frame and watch for a qualified signal. Okay? All right, let's go take a look here. CL. Well, actually, let's do this. Let's kill this. Out of there. Now, the other thing I wanted to show you, here's the mini Russell 06 on the daily. Remember, when you take your DSR levels and you go down in price, you want to modify your price first. So the first thing I want to do is go in. I want to pull this down. Let's look at a 15-minute time frame. Once that's done, let's go to data series, pull this down, text and marker, set that as my default, days to load, 500's too many. Let's go to 75, right click, set that as default, bada bing, bada beautiful, right click, left click indicators. Now, I'm going to come in here and I want to take my DSR major, which is the red green, and this is 4 times the time frame. So the 15-minute times 4 means I want to take this down to a 60-minute. The DSR minor, black and blue, is set to 2 times. So I take the daily down to a minute time frame. 2 times the 15-minute is 30 minutes. Left click OK. Now I've just pulled this down to a 15-minute DSR level trade. My turning point black tip, everything else remains the same. So clearly defined DSR support and resistance numbers. So we want to be sellers against 44 to 45. We want to be buyers against 1130. The DSR minor is in black here. The DSR minor support in blue. Okay, so your bigger term swing plays, you want to come in at your reds and greens, the DSR majors. If you don't want to see the minors, then simply remove the DSR minors, the black and blue. Yeah, sometimes it produces a little too much information. The other way we can take a look at this is we can say, okay, on the DSR major, those are red, green. We can say this is when I trade my normal size. Okay, so for me that's a 2 to a 6 lot, depending on the market. And then we can say DSR minor, which is the black and blue. A, we consider those aggressive. Okay, that's coming off of a 2 times ATR. So I can A, no trade, or B, I can say because it's aggressive, I'm going to reduce my position size. So if my normal size on a swing trade is 4 lot, I'd reduce it to a 2 lot. and then manage it accordingly. Okay? So 15-minute, great for less activity, but nice intraday swings. Again, set the context. The perspective is I've got a 15-minute chart with my DSR minor majors. If we trade through the 1140s, then highly likely we're going to 44.45. If we trade below, close below 34.5, then, if then, conditional statement, highly likely we're going down to the 30 to 31 handle. Now all I have to do is come in, now that I've got my perspective set, and say, okay, let's go look at these other markets. Let's go look at crude oil. Okay, crude oil right here, I was short against the 03s. Okay, look right here, swing highs, short entry. Here's the buy signal winner, sell signal winner, buy signal winner, sell signal, out on stops. So we go short, long, short, we go 3 and 1, or I'm sorry, 3 and 0, and then the final sell right here is out on stop. So we're 3 winners, 1 loser during this trade for 75% accuracy. Now that the market's broken above, likely to close above, then where's the next level? Number 1, look left. DSR major in green, DSR minor right behind it. So 2 different higher time frames were showing support at this level. We held, see the consolidation there, for 3 hours before we finally broke. And when we did break, we accelerated south. Okay? Then down here, we go buy, sell, buy, winner, 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 sell, out on stops, new structure highs. So 0360, next level of interest in this particular market. Okay, there's crude oil. Come and grab another market. Nasdaq. We already looked at the mini Russell. Let's go take a look at Dow. Now again, you can see here when we go into a sideways trade, things become more choppy, but you can see we can just nail these support and resistance zones. So there's a qualified sell. Qualified sell. Dow Jones right here is short. And on an intraday basis, we can buy puts right here as well. Now again, this is a DSR minor in black. Number 2, you note my RSI is not overbought. So here we could come down, take a look at this intraday. Where is my level of interest? Any retest of the 600 to 605 against this massive support zone, I want to be a buyer. Okay? ES06, 14, S&P 500. Now, take a look at this. There, we're in a bull continuation pattern. So as I buy here, I'm buying with the underlying trend. Now the market's rallied back into a DSR resistance zone against these structure highs. If I'm a seller right here, this is a counter trend trade. Some of you don't like trading against the trend. Understood. So right here, what does it require on your behalf? Discipline. You just have to be disciplined enough not to take the short entry. Even when you decide not to take it because it's not in your trading plan, and the market stops on a dime and promptly rolls right back over to the 09s, or right back down to the 05, you can't sit on the sidelines, oh, I should have gotten short. Follow your rules of engagement. Create your plan, follow the plan, period, over and out. Well, how do I know to follow the plan? Because you've developed a belief in that signal. How do I develop a belief? You do your testing. The testing requires that you go back in, you see those criteria met with repetition. You'll see the winners, you'll see the losers, you'll recognize tendencies. And you employ every part of your being that is required for you to be a successful trader every single day. A, you have to see the information on the chart. What do I see? That's visual stimulus. B, I have to then consider what does this mean to me. So you have to compute that data. It goes into that powerful brain, that area between your 2 ears. That's where you decide the meaning. And then most importantly, the third thing is, what do I do based on that meaning? You're the one that assigns meaning to the value of this. And when you see that with repetition, you then have to kinesthetically touch. You have to left click to enter a position. You have to left click to place a stop, to move your targets. All of that stuff is required every single trade you'll ever make again in your life. Why not get really good at that process? Why not develop that skill to the best possibly can, but with no risk in a simulation account or in the replay mode? Okay, so S&P 500 counter trend, love the short entries 13 to 14. And again, the if-then process. If the market rolls over, then partial profits 09, balance off at 05s, and down here, we'd look for the long entries. So if my normal size is 4, and I say if it's a counter trend signal, then I cut my size in half, I'll sell a 2-lot. If I'm wrong, trading against the trend, then the market's going to make new structure highs. If the market breaks above a DSR resistance level, then closes above, we look for the pullback, and now we anticipate the market's going to continue to rally. What does a rally look like? Look left. There's the rally. So here was a DSR minor, once broken, anticipated support. Buy the pullbacks. Look for the continuation move. Same thing every single time. And again, remember, out of 20 days that are trading days per month on average, about 4 of those days are going to be abnormal directional movement. The balance of the days are going to be pretty typical to what we see. And on those particular days, you need to be smoking it. Take every single trade the strategy projects, puts out, and maximize the available profits. All right, let's take a look at our setup.